contributor. So we say goodbye to Evelyn. I want to welcome in Andy Swan, the co-founder of LikeFolio.com. And Andy, it's hard, as Kevin and Evelyn both said, to talk one without the other. So let's talk some Uber and Lyft. From a stock price comparison, Uber, of course, has fared better. We talked about some of its auxiliary businesses that have helped, bring in more revenue in kind of an uncertain time. But going forward, is the concern here trend shift or behavior shift that, if more and more are working from home, less commuters, is there risk to this business model, or is this something that is so correlated to a reopening economy? If you want a pure play on reopening economy, Lyft might be your choice.
Yeah, well, look, I think as we go forward towards a reopened economy, I think we have to be realistic in terms of those consumer behaviors that have changed fairly permanently. I don't know any company in America that is really longing for the travel budget that they used to have and sending people on airplanes and getting Ubers and Lyfts all over town. So I think from a commercial standpoint, it's pretty tough to see a snap back to normal. And I think that really what has happened with Uber Eats, giving Uber that diversified revenue stream continues, because when we look at Lyft against Uber in terms of just consumer purchase intent mentions, this is the number of people talking about using these services. Lyft, they put out a note, last quarter they had a pretty decent report, versus expectations. Everything was down year over year, but they saw a nice bump in the 40% range on a quarter over quarter basis in terms of number of people using ride sharing from those really, really bad lows the prior quarter. But we're really not seeing follow through in that. We don't see that uptrend continue. In fact, we've got Lyft rideshare mentions down 74% year over year, and really I just feel like they're getting out executed by Uber, who I think is just the better company. Uber's food delivery has not only provided them with another revenue stream, but it's provided their users with a reason to keep Uber apps on their phone. It's provided their drivers with continued income and employment so that they don't have to go back out to these cities when things start getting back to normal and start recruiting drivers all over again, which I think Lyft will have to do. And so, from a competitive standpoint, I think that Uber and Lyft were put in the same category for a really long time, but I don't think that they belong there. I think that Uber is the better company. It's investing in the future. It's investing in a diversified revenue stream. I don't think that they're going to be scared of autonomous driving at all. I think that they're somewhat leading the pack in terms of research and development there. They know where they're going, and I'm not sure that Lyft does.
Andy, I've got a 3-year chart up, a 3-year weekly chart up of Lyft, and I don't see a quarter in there where they were profitable during this. This is pre-pandemic. It looks like the numbers were creeping closer to profitability, but then the pandemic hit and they got walloped again. The stock has made a pretty incredible recovery, but the question is, that's not how we make our money. We make our money going from here forward. And the question is, Uber is clearly bigger, right? Uber Eats, international, all those things that we talked about. Lyft is a smaller company, mainly focused on domestic U.S. Is there a chance that this company doesn't make it through all this?
Yeah, I think that there's a real chance of that. I think there's also a chance that they could do pretty well. They could be a nice, profitable company that grows over time and stays focused and in their lane. There's value in that as well. But when you compare them to Uber, there's really no comparison. But I do think that there is significant risk for Lyft over the next 3 to 5 years. It's played out during the pandemic in terms of, if economic conditions worsen, if travel conditions worsen, how do they ever get to profitability? The lack of a diversified income stream is still haunting them. I think they're thinking about getting into food delivery, but they're doing it in a really odd way by partnering with Grubhub and giving Grubhub points to the Lyft premium members and all these kind of workarounds that just kind of scream desperation at this point. So I think, Lyft is a good company. It's a public company. It's an unbelievable from zero to where it is today. Unbelievable story. But in terms of evaluating it going forward as a public company, it's just got a much bigger and better competitor, and it's in a really, really tough environment right now that I don't think is, there's a lot of light at the end of the tunnel that people expect. I just don't see things just flipping the switch all of a sudden and everybody's flying across the country and going out on the town like they used to. I think things are just going to be down for a while in terms of demand for Lyft type services.
And so that's where things are a little bit peculiar then from a stock trading standpoint, Andy, because you look at the name, it's effectively at its point of its peak prior to the pandemic. I know that obviously it came out public and it really was straight down since, but let's say over the last 52 weeks, it's essentially at the highest point that it's been. Uber effectively the same, but at a much higher level than even where it became public. So the market sniffed out some of these key differences that you're pointing out. But in order for this to kind of be the case for Lyft, and we know that their core business or pretty much their primary and only business, which is ride sharing, has been, absolutely bludgeoned as a result of the pandemic because this wasn't allowed to take place. I mean, there wasn't social gatherings. There wasn't corporate travel. There still isn't really corporate travel. Commuting to work that so many use in urban environments. I know that I'm partial to that because I live in Chicago, where more and more people use public transportation or ride sharing services than maybe they do in a Midwestern city where they have a vehicle. But if car purchases start to ramp up so people can remain socially distant into the future, you're more likely to use that car probably going forward. So is there serious risk, to your point, to kind of reiterate here, in serious behavioral changes going forward for a company like Lyft, especially for one that's priced for at some point in the future, things come back? Because they weren't making money before. Now you take away a substantial part of their business. And if that doesn't come back, how are they going to be profitable in the future?
Yeah, I don't know. I don't know the answer to that. I'm sure they're getting really good at tightening the belt right now, which is going to pay off as they move forward. That's one of the things that typically comes out of a really nasty downturn is you figure out what you don't need to be spending money on anymore. And so I think they'll have a better chance of profitability at even lower revenue levels in the future, which is good. But in terms of the behavioral changes, I think that there is a little bit of excessive hope. And I'm an optimistic guy. I want everything to be open tomorrow, and I would go anywhere and do anything. But I don't think that the world is there, and I don't think that they're going to get there as quickly as perhaps Wall Street hopes. So for me, that is the big danger for Lyft at these levels of stock price. I think it's pricing in a pretty optimistic overall consumer behavior trend that I just don't see happening right now in our data at all.
So then final thing here before Kevin and I take a look at an example trade, do you look at these companies as a pair, or do you parse them out as individual companies, Andy, if you were thinking about kind of an approachment to an investment?
I used to think of them as a pair, and I liked Uber and I didn't like Lyft, and that was the way I thought of them. But the separation has gotten to the point where it's clear that they're on two different levels, and Uber's in a different business than Lyft at this point. So I don't think it's as valid as of a pair trade. I also think that there's probably a little bit more. If you're bearish on Lyft, the bigger risk would be some sort of acquisition by somebody that wants to tap into that network, whether it's a car manufacturer or someone like that getting into the autonomous driving. So for me, I don't pair those anymore. I used to, but I think that trade is kind of played out now that they've separated themselves so much.